Good morning, everyone. Welcome to the Indian Chamber of Commerce webinar on funding during the COVID scenario. Indian Chamber of Commerce is a premier body of business and industry in India, set up in 1925 by a group of pioneer industrialists. The chamber has been functioning efficiently since the last 95 years and building meaningful synergies among the industries and the government by addressing strategic issues of national significance. It has been instrumental in facilitating better commerce within the country. We all know that COVID has brought about unprecedented disruption in business and economy for last few months now. And keeping that in mind, we know that the whole startup ecosystem and the industry is starting to wonder whether they're going to be doomed. So here's we what we're planning to do is have a good panelist who can address that issue with a small 1 hour panel discussion on how what is the scenario like. And by the panelists, I mean these are venture capitalists. These are some of the founders and startup companies, founders of startup companies who have been successfully raising funds during this particular period. So, without much delay, what I'm going to do is I'm going to introduce our panelists here with everyone, starting with starting with our moderator, Ms. Archana Khosla-Berman. She's founder partner of Vertices Partners. She's also the committee member of an ICC Women Leadership Committee here in the Western region. She's been featured in the Asia Legal Business Rising Star by Legal Era and LE India. She's been awarded as the Entrepreneur of the Year 2019 by Indian Women Convention. She's also one of the top 10 powerful women lawyers of the country. And from a panelist, Ms. Paula Mariwala. She's MD Seed Fund Advisors. She's also co-founder and president of Stanford Angel and in Entrepreneurs India. She's a promoter director of Hindeton group of countries, one of India's oldest technology companies. With over 25 years of entrepreneurial experience, she's also been publishing several papers in the field of optical communications. Next, we have Ms. Smriti Chandra from Nordic Microfinance Initiative. She's the investment director for the India chapter. She's also on the board member. She's also a board member of Swasti Microfinance. Previous assignments include co-founding First League Ventures, working with Unsing Young and KPMG. She's a qualified CA from ICAI. We'll also be joined by Mr. Sanjoy Chakrabarti, CEO Million Minds. He's also CEO and founder of Graphene Media Private Limited. His past experience includes being managing director of Zenith Optimedia, CEO of Dentsu Media. He's also being involved with as a group director in investments, Group M Media, which is a WPP company. Over 27 years of experience in marketing, along with an MBA in marketing. We have on the panel Mr. Maneet Goyal. He's a co-founder and CEO of Lalten. He's a Forbes 30 Under 30 awardee, fellow from Westerville Foundation, GSBI at Miller Center and Action for India, and has also been a TEDx speaker in the past. Previous assignments also include working with Flipkart and as consultants for various other brands. Graduate from Delhi College of Engineering and also an MBA from NITI Mumbai. And last but not least, we'll have Mr. Vivek Lad, founder and MD GoQuest Media Ventures. He's one of the largest independent distributor from India of cross-border entertainment content. He's got experience across entertainment, retail, and management consulting. He's a bachelor in electrical engineering from Mumbai University and also a master's in computer science from University of Southern California. I would like to pass on the baton to Archana Khosla, our moderator today, Archana Khosla-Berman. Please take it forward. Thank you.
Thank you so much, Ritesh, for the introductions. A very good morning to the panelists and the attendees. It is a pleasure to be here and to have you all on board for this discussion. What makes this more fun is that there are quite a few friends on this panel, so I'm really looking forward to a fruitful discussion. As we all know, what we are facing currently is absolutely unprecedented, and the impact, be it personal or financial, is so large that perhaps it could be well compared to the Great Depression. The business ecosystem is one of the worst hit. We are constantly hearing of layoffs and liquidity crunches. Entrepreneurs are looking at variable payment models, pivoting business models, alternate revenues to digitize offerings. They're looking at all of these as modalities to tide over this crisis. With regard to funding, enterprises are cash dry and in need of funds. Investors are busy battling current portfolio needs and managing LP expectations. Deals are getting delayed or halted, but there still appears to be some sort of traction in certain specific sectors. We at Vertices have seen a rise in transactions in the B2C edtech space, the medtech space, healthcare, certain aspects of fintech, consumer tech, especially with respect to essential services or skill set development. Fundamentally, what we've seen is that the key arenas which seem to be showing traction are the ones that are based A, on online modalities, and B, which have a direct impact on the end customer as a result of technology. With that, Paula, I would like to address my first question to you. Given that seed fund is an early stage investor, for all practical purposes would be the first one cutting a check for any startup. How has COVID-19 impacted the investment philosophy of the fund? Will you remain bullish based on the chutzpah of an investor or of an entrepreneur? Or would you be far more selective and concentrate only on some specific sectors now?
Thanks, Archana. Can you hear me?
Yeah.
Yes, Ken.
Yeah. Okay. All right. Uh, well, of course, these are unprecedented times, and we've never seen anything like this. So I think it's more than a question of being focused on certain sectors. We would be certainly, as any savvy investor at this time, would be focused on, of course, the team and the entrepreneur, because one doesn't know how this is going to unfold. Of course, certain sectors, like you mentioned, edtech, fintech, everything, e-commerce, etc., will be the way forward. We will look at contactless business models and so on. But the trick is going to be, the success will be with those teams which can deal with uncertainty. So for me, the very first thing would be to look at the team which can face this uncertainty well. The business models, we have to be ready to pivot. We have to be ready to adapt to whatever the new normal turns out to be. We are all making guesses whether there is going to be a new normal or not. So those are going to be extremely important. I think some of the things will change in terms of, in our own ecosystem, we were used to having business models which may not always have been robust and were based on either a lot of funding available, or just building up a lot of customers. Monetization was may not have been a consideration. Some of that will change, because you see the consumption pattern, at least for the next 2 years, there's going to be a huge shift. Certain sectors will vanish, certain sectors will have a lot of focus on them. So we definitely, as investors, need to focus on three things. The team which can understand and adopt resilience into whatever they plan, uh, and use funding judiciously, be very much in touch with the consumers, customers, that their target market segments. If you are looking only at recovery, which is U, V, W, all these words which are going around, I think we need to plug in a third axis, which is going to be change in consumption, change in the pattern of consumers, spending, growth, etc. And that is going to, the one who also factors in that axis, not just the numbers, that okay, so much funding happened and so on. That is the company and that is the investor who will succeed. So we just have to wear a different lens now. And I wouldn't want to just say that's only certain sectors, because that makes a herd mentality. I think there'll be new sectors which will emerge that we don't have, much like what happened even after 2000, after 2006, after 2008. New sectors emerged. If we had all herded towards certain sectors, we would not have funded innovation.
That's very helpful, Paula. Smriti, my second question is to you. You deal within the macro set of financial services in a very niche sector of microfinance, which for all practical purposes impacts the absolute grassroots level borrowers, which have little or no access to capital. COVID-19 obviously would have created clear ramifications because of repayment issues or collection issues or a combination of both, thereby creating high probability on increase of delinquency ratios. As an investor in this sector, what has been the general thought process for curbing NPAs in your portfolios?
Sure. Good morning, everyone. Welcome to the webinar. So, Archana, as far as microfinance is concerned, I think it's pretty much been the highest impacted, so-called highest impacted sector from the COVID crisis, and mostly everybody is writing off that the sector will not survive. There'll be a lot of consolidation that's going to happen, and so on and so forth. But as far as I look at my portfolio companies, I think one thing which we've been clear and supporting the entrepreneurs is first find your liquidity situation for the 3 months. Then think about growth. Then think about expansion, and what was supposed to come for the year. So I think the way we are looking at it is the next 3 to 4 months is all about sustaining your cash flows. A lot of support is coming through from the government and the RBI and the likes of SIDBI and NABARD to support the sector. And we're hoping that it trickles down to the MFIs in the right way. Having said that, I think we will see a rise in delinquency coming up in the month of July and August. Right now, we are all in the moratorium period, so we really don't know, how the collections are going to pan out. But what we are hearing with continuous survey of our customers is that once the economic activity really starts off for them, then collections will start coming through. But the big question is, when is that going to happen? So if I dissect my customer segment, there is a large portion which is agri allied activities, dairy activities. Those customers have been continuing to earn through the months, may not be in the same proportion, but in some proportion. But there is a big segment which is small stores which have had to shut down completely and have had no revenue. So the dissection of the customer segment is important. And then we categorize what kind of NPAs are we going to look at and provide for it. And I also see that in this 3 to 6 months time frame, there is a huge demand that is going to come up on the credit side for the MSMEs, for the micro women entrepreneurs. So I think the portfolio companies need to be geared up to be able to provide them additional credit to sail through the crisis. And that is where I think a lot of companies will fail because of cash crunch, because of non-availability of capital, both in the form of equity and debt. So companies which have been able to conserve cash in this period, make use of the moratoriums that they are getting from the banks and the NBFCs to the fullest extent possible, will be well positioned and geared to kind of accelerate when things start up. From an investor perspective, we are equity investors typically, and we take a long-term view. And we've seen that microfinance segment starting from the AP crisis in 2010 and then multiple crises, either through famines or floods or droughts or demonetization to be precise, the industry as such has been very resilient and has come out of it in different ways. So we think that this is probably comparable to demonetization to some extent, but a far more wider impact with the customer segment. And as equity investors, the inherent demand exists, so we believe in the sector and will continue to invest. But of course, what we will wait to see is how the delinquencies pan out, which is in the next 3 to 4 months. So I do not see immediate investments happening in these next 3 months, but in the longer horizon of 6 to 12 months, I think we'll see a lot of investments. We'll see also a lot of consolidation and inorganic growth coming through for the sector.
Thank you, Smriti, for that. Vivek, I'd like to bring you in here.
Yeah.
Given the nature of your business, which is as diverse as it can get, including production, content trading, distribution, and what we have seen over the last so many years of knowing you, and more importantly, advising you, how consistently this genre of business has seen gradual and positive traction. Having said that, given the current times, can you tell us how your business has been impacted, and are there any potential opportunities that are thrown up during these times?
Sure, sure. So, of course, the business is impacted to a great extent for the good and the bad at the same time. Good for some folks, not so good for or many others. So, I'll really break it down. So, if you look at the production business, that's largely stopped because of lockdowns. There are no production sets that are operating. There are people are trying things to produce stuff at home, but any high level production, all that is halted. The second challenge with the production business is, with the remigration of laborers and workers and people who work on those production sets. Whenever the lockdown is lifted or things open up, there'll still be a dearth of people working essentially on this production set. So it'll take quite a bit of time for the production activity to kickstart. We don't foresee anything to start at least in the next 3 to 4 months at minimum, till all the migrant laborers who have left, if they come back. Secondly, on the exhibition side, on TV channels, of course, have seen significantly high viewership, but they're getting impacted significantly by a decrease in their advertising revenues. So because consumer spending have stopped, pretty much all the major advertisers, which include FMCG brands, car brands, include finance companies, essentially across the board have stopped spending because they don't have a certain enough sales forecast, and that's affected their marketing spends as well. So there's a crazy decline in advertising revenues. However, TV industry had built up strong distribution revenue, where they actually collect money for viewing channels from cable operators over the past. So that's helped them survive to a certain extent. There have been salary cuts across the television industry. The ones that have actually gained from this is essentially the online streaming ones, right? Those folks have been struggling with adoption. Those folks have been struggling with getting people to use technology and get onto the streaming platforms more and more. Those folks have seen crazy uptake at this point. So one of the biggest change in behavior that we'll see going forward is more and more people becoming permanent customers of streaming platforms. Earlier, for better part of the janta, it was watched as an alternate or good to have, but it will now become I need to have this as things go forward. So it's both good and the bad at the same time. And of course, from our business point of view, we work pretty much in all the continents, across the world: Africa, Latin America, US, Europe, Southeast Asia primarily, and India as well. So the impact has been varied. African countries are still very healthy as far as the entertainment business is concerned. Some of the American businesses are pretty healthy. Middle East is moderate. Southeast Asia has bounced back now, so we've got few deals going there. Latin America again is sort of in the middle. Not that great at the moment, but we hope that some of that will bounce back by the end of this year. So yeah, I mean, having the diversity globally has definitely helped us sustain this period. But how much of that will continue, we'll only see as things go forward. I mean, if you also see the theatrical business, that's completely gone. I mean, literally for a year, there will be no theatrical business. And if those companies manage to stay afloat, we may have a theater business in future. Otherwise, otherwise it will be a tough time for a lot of those folks as well.
Right. Thanks, Vivek. Maneet, I'll come to you next. Given the high impact that your venture brings across directly to the non-farm rural community, a lot of your work also depends on supply chain logistics, which, as we all know, has been seeing its own challenges. So, if you can tell us how the impact has been for you, and also you and I talked about some very interesting angles around how you quickly improvise the business model to suit the current demands. Can you talk us through those as well?
Sure, Archana. So I can firstly tell about what we do. My company is called as Lal10, and we work with 1,800 rural artisans and SMEs, primarily in the sector of handloom and handicraft, and we bridge them to connect them with global retailers. So we have close to around 400 retailers across 18 countries who buy our products. Most of our products are basically non-essential, with the definition of non-essential in this time, which are textile-led products like home furnishings, garments, and fabrics and yardages, which we give it to retailers globally. Uh, Now, these are some crazy times actually, and as soon as the lockdown started, the movement of non-essential goods went down to entirely zero. This eventually led to zero revenues for us. I can entirely agree with what Paula has just mentioned, that suddenly plan Bs and innovations have become very important. And again, with Smriti, as she mentioned, that cash is king right now, wherein we would have to conserve cash for certain longevity, which we have initially planned, but more than that. I think some interesting facts which I can tell you about my business, what we have been doing is that on day zero, we realized that our revenues is going to zero. And by day one of the lockdown, firstly, we ensured that all of our employees are safe. So we are a team of 38 employees based out of Noida. And we did a COVID insurance for them for the first time on day one. By day three, we took a feedback from all our buyers, all our retailers, whom we support and give our products. That what is the demand they are envisioning in the coming times, and the scenario was not that great because the retailers also, the offline retailers are also foreseeing that they would be moving towards an online marketplace model, or at least for a couple of quarters, they would want to protect their inventories and would not want to buy more. I think it was a no-brainer for us that we would have to jump into essentials immediately and try to supply essential goods. By day 10, we already have a sourcing, sales, and operations team in house. We plug them to supply COVID supplies like PPE kits, masks, infrared thermometers. And on day 15th, we were lucky to land up our first order. And by day 30th, last month, we did around 37 lakh rupees of sales. And one very important thing which we realized was that oiling your cash flows was very important during this time, and we cannot just barely sit with zero revenues on our heads. Yesterday was day 42nd for us, and by that time, we are doing close to around 15 lakh rupees of COVID supplies every week. In terms of some numbers, we have done around 70,000 masks, close to around 500 infrared thermometers, 5,500 PPE kits, and we are getting into some interesting projects with the artisans. Um, just to mention what Smriti also said, and I entirely agree with it, that how cash is king right now. Because though we have been lucky, one of the fortunate startups in these times who have raised some capital. We were lucky to get a round close to $1.1 million a couple of months ago. But we realized that the runway which we have already envisioned, we would have to take it for a longer run. And primarily for the same sake, we have asked our employees to do a voluntary pay cut. As co-founders, we have taken a 80% hit on our pay cuts, such that we can just increase the runway for us. For the impact, I think now we are much more confident that the company is stable in terms of its revenues and cash flows. We are in the process of bringing in, since we have an eye on impact as well, we have a focus on bringing in impact with projects like creating 1 million masks a month. So we are envisioning to create 1 million masks, cotton masks made by our artisans, by the raw materials available in fabrics in their own communities. And we are in a phase. So today we are doing close to around a lakh masks a month from these clusters, but we are in a phase of implementing some cost close to around 70 lakh rupees, so that we can increase the capabilities and capacity for these artisans and create close to 1 million masks a month. India needs close to 38 million masks as per the Invest India report, and we are today only at around 25% of its capacity. I think there's a lot to be done by young startups like us and the teams which we have, coming with the innovations in the models. And suddenly plan Bs have become very important. So I think that's what I can say.
Thanks, Manish, for that. Sanjoy, yours is a very interesting model wherein you bring in entrepreneurship programs or learnings to campuses. Can
Yeah.
you elaborate a little about it and talk us through the impact of COVID in your business?
Yeah, you have rightly put it. Our business model is slightly different. Yeah, what we do is that we take this entrepreneurship learning program to campuses. That means the set of kids who are likely to who are looking at entrepreneurship or setting up startups as a their career progress. That means the guys who are still out of the pyramid of entrepreneurship ecosystem, but they are the one who is standing on the door who is going to enter. Now, if you look at from the situation, that means the guys, the young kids who are thinking of becoming startup entrepreneurs, and suddenly they are that set of guy gets hit with the situation where they say that this world is going to change, so that the anxiety level will be that much more higher for them. So now for this set of guys, for them to still believe in startup ecosystem, believe in that startup and entrepreneurship can be a stable career option for them. So which is what the challenge as a business model, if you look at it, that's what we are facing, and we are facing, and we need to handle it. As of now, for example, we are about connected with something like about 500 odd campuses across 50 plus towns, where we in these campuses we run an extensive entrepreneurship learning program, which is not theoretical, which is where we pick up startup founders, go to the campuses, interact with the kids, and share their life experiences and how these kids can looking at entrepreneurship or the so setting up their own startup as a career option instead of looking just at a job कि बहुत मैं भी कर सकता हूँ. That means these guys have to get convinced that yeah fine, if the others can do it, so can I, and then there's a viable option for me. Now that is the exercise we do, and in that there's an entire learning exercise. There's about more than couple of 100 hours of learning experience and the hands-on experience which we give it to these kids. We pick up these kids, come to a startup, spend time with the startup founder, spend a day, spend a week, various kinds of options, work with them for about 300 odd hours of learning all about entrepreneurship and startup from the actual startup practitioners. It's not a conceptual or it's not just a pure theoretical learning. It's a learning from the practitioners how what startup is all about or setting up a startup is all about. So in that context, when we are working, that means today when we are talking to these kids, we need to get them the confidence that yes fine, what the path what you have chosen is right. That means, so what we are doing is that we are getting these kids to come spend time and the with the startups as interns, spend time. For example, right now the exercise, which is when the colleges are closed, these kids have got time. We are getting something like 1,000 kids picked up from various places, and they are spending time with 1,000 odd or about 500 odd startup founders, going and spending time learning how they are coping with this change. Because the way we are looking at it, that for us is that means this is a extremely important opportunity which may be coming in a once in a lifetime opportunity, where this kids who want to become a startup, for them to get into a situation, it's like something war is going to happen. It's a simulated war situation for a soldier to learn. It is simple, and this simulation is a real life simulation. So for this 5,000 odd kids to go and spend time with 500 odd startup founders, and when they themselves are struggling to survive, that time go spend time and learn how to manage a business in a completely uncertain situation where you do not know what's going to happen. So that's the kind of experience we are able to bring it to these kids and make them that much more stronger and start looking at the system and believe that what is going to work. The way we are when we interact with the kids, they are the general feeling, because we keep on reading in whatever newspapers come out in the TV, that's the startup what you call funding is all collapsing, Chinese funds are going to dry up, and the entire system, all the startups are going to, so there's a doomsday. The way we are looking at it is that for this budding entrepreneurs, they are actually, we are dealing with entrepreneurs of tomorrow who have not even gotten to the situation. Other situation you're talking about, those are the actually, they are the current entrepreneurs. I am talking to people for tomorrow, for them to hold on to this concept. When you tell them that will the entire world collapse, we believe that the entire world is not going to collapse. The startup per se system is not going to collapse. First of all, startup per se, is it an industry? What do you think? That's not industry. You are representing a set of a business stage where for a particular vertical, particular industry sector, and ultimately the good money is going to chase good project. It's not that is the money drying up from the market. No, If the question is that if there's a good project, good area, there's good money will chase, and a good idea that get chased, and that will get its funding. If you are in the right sector, with a growing sector, if you are into an area where the kind of project what you are coming up with, then that project is, and how the business model has been built around that. If there have been, all of us know, there have been business, there have been startups built around the basic on the build to sell. Maybe what we look at the today, if somebody is creating an idea where this idea is basically built into build to sell, that's not a sustainable thing. But if you are into an area where it's fine, I have a project, the project will actually deliver revenue, will actually deliver. I'm just not buying audience, I'm not just creating a huge or user base or a subscriber base. My subscriber base, or my user base, my consumer, is real time, it's near, it's not eventual, it is happening, will be happening soon, and it is going to deliver me revenue. Money will come in, projects will work. So the students who are looking for the tomorrow's entrepreneurs, they need to start looking at that. What's the purpose for which I'm building up the company? What is the sector I'm looking at? In that sector, what is the core, what is the disruptor I'm bringing in? I'm going to be a process innovator, I'm going to be a market disruptor, or I'm going to be a data and the computing power based. There are futures, there are startups which will work. So basically the mindset, what with when we are working with these kids, we are bringing in the mindset and the core competency what you are building in, and the purpose of the business what you are building in. If you have got something strong, there are just 500 colleges. Each college comes out with a couple of projects. There are future for them to grow, survive, and excel. So that's the part we are in.
Thank you, Sanjoy, for that. Smriti, my next question is for you. In this environment where several term sheets are being taken away and deals are being stalled, it is commendable that NMI has recently closed a microfinance deal, which we were fortunate to be a part of. This truly showcases strong character and pedigree. How has COVID impacted your thought process in cutting a check going forward? Is the philosophy inherently to reserve capital for portfolio protection or to seek out distressed assets as opportunities?
So yeah, we recently closed an investment in MFI, which we've been discussing for the last quarter or so. And obviously, when COVID started, there was a whole discussion of whether we continue with it or not, or how is this really going to pan out. The questions did arise, but I think I go back to what I said initially, that we are long term view investors. So if we inherently believe that the microfinance space or the MSME space has merit, then I think there is no taking away from the fact that if not in 9 months, in 18 months, things will be back to normal. I think that's the belief with which we kind of invest. Now, but I will also say that where things are to be started now, the discussions on capital raise have to begin now. I think companies will find it very difficult to raise capital from afresh. As a philosophy, I think our first port of call is to support our portfolio companies. So funds which have limited dry powder or in their late stage of investment, they will reserve their cash for their portfolio companies. But there are funds which are in the early stage of investment, have enough dry powder to experiment with. They will kind of look at opportunities which have merit and will come up, in the future course as we go along. And investors will take bets on strong business models there, strong promoter teams, strong set of operations. I believe investments will continue to happen, albeit very cautiously and treading very slowly. But where funds are with us and we are ready to deploy, which is large set of investor community today, will opportunistically look at good investments. The only thing is that the expectations of the promoters will also have to get aligned. and appreciate that we are currently facing, a pandemic crisis. Markets have crashed. So we need to keep in mind that the expectations have to match from both ends. And if we are reasonable and rational about it, investments can continue to happen. I think we lost.
We lost the monitor.
Yeah.
So Smriti, I have a question for you.
Yep.
So are you also right now in a phase of looking at new deals, or are you only taking the deals which have historically you've been looking at over the last quarter, and not new deals?
Yeah, so the ones which we had advanced to a much later stage already, we are not stopping from doing that. The ones where we had started our evaluation, or we're in the early stage of figuring out whether the company meets our criterias, those will take a little bit more time, because for us, physical diligence is very important. We go to the branches, we visit our customers, so that itself is going to take, I think, by the time flights open up, trains open up, for us to reach our customers. So the physical aspects of the process will get delayed, and therefore we will not aggressively push for deals. Having said that, at NMI, we are continuing to engage with promoters who had either reached out to us before. It is also a good time for us as a fund to compartmentalize our sectors, see which one is going to survive this crisis, which one may fall off, and identify companies within each sector or segment which we think are doing well, and to see if we can back them. So it's not a complete, I would say it's not a complete stall, but the process
Actually,
will take time. It'll be a
yeah.
slower process than what we have earlier seen.
I can also quickly chip in and say, in Stanford Angels, where we see angel level companies, we are actually seeing a lot of deal flow, and we are pursuing some of them. I think we have the time to look at some sectors and technologies. The physical due diligence is what is the issue right now, but I think one can sort of take that into account, that will happen eventually. But it's not that investors are actually looking quite seriously, because like I said, any disruption is an opportunity.
Yeah.
Hi, sorry, I just lost a bit of connection. Can you all hear me now?
Yep.
Yes, Archana.
Yeah.
Yeah.
Archana, can I ask a question on this to you? Hello.
I think she's gone again.
Or to Paula or Smriti.
Sure,
Please,
sir.
See,
Sanjay.
for example, if suppose I or any of us as a startup founder who is there running the business, or even look at those who are going to come new. Now, everyone now we talk about the new normal, post-COVID, the new normal. So, assuming startup funding as a new normal, what is going to emerge? Now, what are the evaluation criteria which will change pre versus post? That the same project, suppose we look at the same project, say 3 months back or 6 months back, you're looking at the, if I look at ABC criteria evaluation, and from there tomorrow the criteria will change to something else, or the same criteria may remain, but the way I'm looking at it will change. I'm
Yeah, I
asking
can
this
take
question
that.
because taking into account that, so for example, the kids which will be which we are dealing with, if I have to tell them that, look, this is how the mindset has changed, this is what becomes important for you to address and have answers ready with.
Yeah, I'll just quickly take that, Sanjay.
Yeah.
I mean, it's a very valid question. I think if you go back in history and look at wherever there have been perturbations and how VC behavior has changed, the matrix does change. We were used
Yeah,
to
yeah, yeah.
absurd projections and unit economics because we were banking on humongous amount of consumption, at a velocity which, because of pumping money and access to capital, right? Because everybody was looking at the India market and so on. So we cannot take that for granted. I'm still hopeful that we will have a lot of capital coming into India, but one cannot take that for granted. I think your unit economics will be really looked at with a fine tooth comb now, and I think
Yeah.
the execution will be really granularly evaluated rather than having this whole macro pictures. I think the entrepreneurs have to recognize that it's not about telling a good story. It's not just about that. Of course,
Mm.
you can start with
Yeah.
that, but
Mm.
it is going to be how you're going to execute, and at a very granular level, and not assume that I will have so much access to so much capital and
We
hence
will manage.
I
Yeah.
will have these numbers. It is going to be business 101. You are going to look at the fundamentals of the business, which is how it was actually when
Yeah. Yeah.
we see when we started in 2006, for example. A lot of it was ground level. How are you going to actually, if you have 20 crores in the bank, actually, how are you going to spend it?
Yeah.
And how is that going to translate, right? So, a lot of questions around physical execution, extremely tight and prudent spending, and assumptions which are grounded in actual data and not on a lot of assumptions or me too or a China story or or a Europe story or so on. So I think it's going to become a lot of practicality will come in. It's going to be it's going to be about creating value and not valuation. You cannot just flaunt your valuation and say, I got that valuation. So
Mm.
what? Are you going to be still able to build and deliver on it? I think those questions will become more real and more solid than ever before. And I think people will really drill, entrepreneurs who are good at telling stories, having good ideas, having good, even a good business model. But actually, it's going to become much more execution centric.
Yeah,
Right.
agree with that. And I think just to add there, I think, as Paula mentioned earlier, it was all about consumption, India consumption story, and everybody just kind of would say, yeah, it's a big market, it's out there. We'll get a share of that one way or the other. But as Paula mentioned, I think now the startups which are going to come up with new ideas will have to deal with a post-COVID scenario where you have to kind of assume what is going to be the behavior of the consumption that is going to come
Mm.
about and address some of that, and how are you pivoting your business model or a business plan to be able to address that particular market in terms of exact size, demand, and all of that will become much more important. I mean, additionally, I think as investors, we always look at the entrepreneur team and their zeal to kind of make it work. Those basic concepts of investment will not change. What will change is how you as an entrepreneur are pivoting through this crisis, and how is your product or business model addressing some of the scenarios and situations that are evolving as an how we go. So the new entrepreneurs and startups have to keep that in mind definitely as an additional layer of filter which investors will look at.
I think it's going to go back to how a good VC should really work, but of course, with the additional caveat of uncertainty in front of it.
Right. And Paula, another question for you. Since funding is going through a major overhaul and investors and LPs are also under a lot of pressure, are investors contemplating changes around the business leadership within their portfolios? And also, what is the strategy on LP expectation management? This is actually for both Paula and Smriti.
Yeah, so I mean, LPs definitely have been briefed that all the trajectories of the companies are going to change. A lot of the exit options may become longer. So definitely talks are on. LPs also understand this because it's a global phenomena, not specific only to Indian markets. So and they've heard it from all their funds, all their investments across the globe. So I think in that sense we are in good company. In terms of, I think the second part was about changing leadership in the companies themselves. Uh, I think those who have, we are talking to the leadership teams of our portfolio companies. There are few who have frozen. I mean, and there are sectors which are so deeply impacted that really they are in a state of shock. So that's why we are trying to provide a lot of mentoring. It's probably not a good time to change leadership at this moment, but it is not something we would rule out because if you have to, for example, completely change a physical model into a tech based model, and the entrepreneur may not be able to do it by himself or herself, um, and may not really have that vision. So if you have to change a chain of restaurants into cloud kitchen totally,
Hmm.
how, you will definitely need people with different experiences. So these are conversations which I've started. I think some entrepreneurs are keen to pivot sooner than later because they knew a lot of things are, I think it was mentioned the theater business is going to change, the way we, go to restaurants is going to change, travel, hospitality, all of that, right? So, for example, in one of our hospitality companies, we've quickly pivoted to a much more online model, um, of doing experiential things and so on. And she's not the right person. It's going to become more of a content thing, at least in the interim. So there are definitely changes which will happen. But I would say these are times to also figure out what will happen. It's not time for taking hard, very concrete decisions, but plan for some big changes.
Right. Vivek, I would like to bring you in here.
Yeah.
So you can tell our entrepreneur friends some key survival strategies. One is what are the strategies you have thought of adapting to tide through these times, and what are the strategies would you like to advise any
So
entrepreneur?
quite a few things that we've done that have actually sustained us or will sustain us to this period. So one of the things was very clear. I mean, it was not a pandemic scenario that we did this for, but we always had very healthy cash flows, and we always kept cash in the bank for at least one year worth of no revenue scenario. So you always sort of went with the idea that in case we don't make money for 1 year, will we have enough money to survive? And it was not definitely not planned from a pandemic point of view, but it was just planned from a business continuity point of view, because entertainment business in generally goes through its own cycles every 2 to 3 years. So we wanted to keep ourselves ready with enough money, and that's definitely helped us through this. So I think going forward, that should become a new norm where companies who are profitable, while they reinvest to grow the companies, they need to basically pull out a certain percentage of it for such situations, so that whenever such situations come in, they have actually healthy, cash in bank to survive these things. The other things that we've done is we've actually gone and restructured some of our payment plans with a lot of our clients. So some of our clients who were going through a certain cash crunch, they came for a discount, and because in certain cases margins were low, we told them, look, we can't give you a discount, but you can pay us in November for a payment that was supposed to come next month. Of course, a risk assessment was done whether the client will have the capacity to pay in November or not. But we've gone about and restructured some of our collections. In some cases, we have actually gone ahead and given discounts to some very, very large conglomerates and asked them to pay us upfront now. So again, payments that were supposed to come in November, we've collected them now, um, just just so that we have enough again cash in the bank, and we de-risk ourselves across the board. So again, because our business is diverse, we were able to do some of these things. We've not had salary cuts, fortunately, but we've definitely moved most of our business now into a work from home scenario. I mean, that's something we will continue to do even after the lockdown ends. It will help us, on a more long-term basis, reduce our administration costs, reduce our office and real estate costs. We are in Bombay, so commercial real estate is super expensive out here. So that's helped. Thirdly, this scenario has forced us to go into a highly efficient functioning. So moving across our whole business into collaborative tools, correct? Moving all our workflows into automated systems. So that what that helped us do also is actually increase the revenue size a little bit without adding more people to the team. So with the same team size, we were able to generate a little additional business that wasn't there pre-COVID. So it's been sort of a balance from multiple angles, balancing your collections, balancing your payments, balancing your efficiency, so that if not increase, you can at least sustain your revenue levels without adding additional people to the team. And of course, improving what your future cash flow will look like, and using this opportunity to reduce those expenses.
Thanks, Vivek, for that. Maneet, I would like to bring you in here. There is a lot being talked about employees. And to this, for my entrepreneur friends, I would just like to talk about this WhatsApp pictorial representation which is doing the rounds these days, which shows on one hand an employee bleeding because of one wound, telling the entrepreneur that he'll never understand my pain. And on the other hand, we see a smiling entrepreneur saying, I'm sorry. And behind his back, we can see several knives and a lot of bleeding. So what I wanted to, the fact that you and I were talking about, and you were telling me some interesting things around your dealings with your employees and vice versa. Can you share your thoughts on that? Anup, you're on mute. Can you please unmute yourself? We can't hear you. You're on mute.
Yes, sorry. One thing which I can entirely agree with Vivek is that suddenly the companies and entrepreneurs have become intrinsically much more efficient in these tough times. And as an example, I can tell that over the last 45 days, one thing which we have realized is that communication is very important with the employees. And we have made sure that we communicated thoroughly what the scenario is from the demand perspective, from the supply perspective for the company and company's health, and the cash in bank for the company, so that they also have a better visibility on how their employment and contribution for the company can eventually look like. We did a small social experiment within the company, and it resulted in a very interesting inference for us. So, inspired by different big entrepreneurs who have been leading these their companies, we also did a voluntarily pay cut in our company, wherein we offered employees to achieve a average reduction of 25% on our gross salary budgets. The interesting fact was that and we also made them understand why we are doing this actually, and it's primarily to save each one of us jobs in the company in a longer run. For example, this continues for over a year or maybe 18 months. You never know. So, and eventually we were able to cumulatively achieve 30% average as target of what target we have been planning of 25% voluntarily. So I think that has been a great support from the employees, where they also empathize with the entrepreneurs. And as we say, as we are talking, I think there have been different verticals in the company which have been working very efficiently. So we are envisioning that there would be a digital tsunami for SMEs and rural SMEs, artisans, which would want to have a vent to an online space where they can eventually sell their products. And as we are talking, we have a technology team in house which are creating technology solutions. They're working 30 hours a day, primarily to get the technology solutions live as early as possible in the markets, at least a quarter before what it was planned. So I think that the employees are much more empathetic in the sense wherein they understand that the company needs their support, and there has been a lot of innovations which we have been doing in the company with different plan Bs and executing them. And employees have been great. And I think the sole reason is that communication has been very transparent from us to them.
Thanks for that. I wanted to ask all of you actually how your experience on working from home has been. Ola, can we start with you, followed by Smriti?
Sure. Well, actually, it's been kind of nice not to have to commute, but actually, it's been quite productive, except for some technology glitches which happened yesterday and today. But otherwise, if you have good internet, and I think everybody has figured out that this is the way to communicate. Uh, Actually, it's been pretty productive. I think it does keep you focused because you know that you have to get some things done, and like Vivek and everybody mentioned, actually a lot of stuff needs to be done. I've been working with like 15 portfolio companies, and everybody is facing very similar but very different challenges. So while everybody is trying to talk to employees, depending on the kind of employees, the kind of homes they have, kind of business continuity transformation has been challenging for most of them. And for investors, it is really our job to give them a year just to listen to them. So I think a lot of that is happening at home. If you just decide that, okay, for these many hours, I will not look at anything else in the home and just be focused on work, you can get a lot done. But yeah, it can be challenging at times, when you have to rush and get supplies and, manage the home and other things that go on. But overall, I think because everybody is working from home, I think it's been a very personalized way of getting things done. And I would say productivity has been pretty good.
Yeah, I think I agree with Paula, but as an investor, a lot of our work actually kind of can get done without physical meetings, and I think that's got re-emphasized during this COVID, lockdown scenario. It's definitely been more productive. Um, but one thing is that there is sometimes no start and an end time. People just assume that you can even have a call at 9 because you're at home. So what? So that's in some places I've seen that that's been an issue. So you have to regulate your day, very clearly as to this is the time I'm really going to spend on calls and lock yourself up and do it. But productivity wise, I've not seen a difference. Our large part of our work in this last 1 month or 6 weeks has been just monitor our portfolio companies mainly. And as Paula said, just hearing them out, the challenges that we are facing, the solution which is, the situation which is evolving on a pretty much everyday basis, at least for our portfolio companies, monitoring that on one hand, and parallelly at the same time keeping our stakeholders informed, which is our LPs and our investors who are also spread across the globe. Keeping them informed has been the main work for us as investment managers, and that I think has very seamlessly moved on to a work from home scenario as well. We haven't seen many glitches as such. But yes, once we have to when we have to do new investments, I think it will be time for us to move out, as I said, physically, and that is where some challenge is going to come. So far it's been okay, except for managing a 6-year-old at home who wants to come and peep in, whenever you're doing a webinar and you're keeping him out of, the realm of the screen. That's a challenge, but otherwise it's been okay.
Great, great. I think there are a lot of questions coming in from the attendees. So I think I'll end with my last question to start with Sanjoy on
Archana, I think your voice is muffled here.
can you hear me now?
It's muffled. It's extremely muffled. I think your mic is in a problem right now.
Okay, let me. Is it any better now?
No.
Is it better?
No, maybe turn off your video and see.
Okay, let me do that. Is it better now?
No, your voice is actually getting distorted significantly. It's actually.
Archana, is it okay if I take it from here?
Yes, please do that.
Yeah, you could put up one mute. Yeah, I think we're getting a lot of questions around. So I'll start with a few, and then I'll also allow the attendees to raise your hand, and you can ask your questions after I'm done with the ones which have already come in. Paula, I'll start with you. There are a couple of questions which just come at the time of registration itself. So here's one which says, how can companies during the COVID scenario reduce their risk by leveraging funds more from equity than debt? And there's another question also which I'll ask so that you can answer both of them together. What will be the impact of current situations on further funding of lending fintechs and new startups?
So I don't know if I got the first question. I mean, equity in a sense is the most expensive form of funding because you're giving your stake in a company to somebody, and it's a longer cycle to get equity. So if you do have a business model which you think can attract some type of equity investors, certainly that's better on your balance sheet in that sense because it won't take money out of your company. But again, it's a little longer cycle to get those funds. But it is a good time to start thinking about raising money for your company through equity. There are various models available, but primarily you have to be ready to dilute your own holding. Debt right now for small businesses is very, very, it's not a great situation. We are awaiting, and I'm sure Ratish, all the chambers, I know at IMC we are doing, I know you guys are as well representing to the government that MSME funding, all kinds of debt as well as grant funding has to come in for MSMEs and startups. Otherwise, it's going to really break businesses down and create unemployment. So I'm hoping that there'll be some good packages available, good stimulus available, which can make some good debt options for startups and companies as well. And the second question was on. Sorry, what is the second question?
So second question was on has there been any impact on funding fintech companies and the new startups in this COVID scenario?
Yeah. So fintech companies, I think for sure, and maybe Smriti can also weigh in there. But definitely, there are two aspects. The online payment, everybody knows that that's where it's going to, contactless selling, contactless buying, everything is going to happen. So, those companies which have good solutions for various sectors, I'm not just saying Paytm type, but peer to peer as well, those companies are being looked at. Also, since there is a cash crunch, that the lending companies are being looked at, but the problem there is the lending companies have to get money from NBFCs and other banks, and there will be a huge crunch there. So it's a bit of a catch-22. There is a definite requirement. People are going to need a lot of cash and a lot of funding to tide over this, but it's going to become high risk, high return. So people are going to watch. There will be a slowdown in funding of fintech companies overall.
Smriti, you want to add?
Yeah, I think specifically on fintech, as Paula mentioned, I think digital payments, any form of digital transactions, I think will continue to survive and grow, and we'll see a lot of interest coming in from the VCP world. But if I were to look at lending, side of the companies or companies which are into lending are going to face a lot of crunch, especially because most of them today are burning a lot of cash. If that continues without further disbursement and further lending and no revenues and no collections coming in at the same pace, they will face a lot of crunch and may not survive. But ones which have just raised capital, are well capitalized and can survive for a few more months until disbursements start picking up, they have a good chance of really riding on the opportunity which is going to come after. Yeah.
Thank you. Vivek, there's one question which has come in the question section itself for you. It
Yeah.
says that in your view that the web streaming is going to be the future. So how does the revenue really pick up if there's going to be drop in the advertisements?
So here's the thing. A lot of the web streamers are now moving to what is called as a subscription model. So if you know folks like Netflix or many other companies like these or even Amazon Prime, they charge you a monthly fee for accessing their services. That is going to become a norm as you go forward, right? And that doesn't really depend on advertisements, and that's one of the reasons where the stocks of Netflix and companies like are also surging at this point. Um, that's also the case with the regular TV channels as well. It's mass. So the money you pay to your cable operator, some part of the money goes per monthly to those channels as well. But they just supplement additional revenue using advertising. So web streaming will continue to prosper. And having said that, it's not to say that advertising will not come back. It's just that it's a function of consumer spending. In 18 months, 2 years, 3 years, whatever that time frame is, once the consumer spending is back to what it was back in December or November, the advertising revenues will be back to that level. It's just a matter of sustaining till that time. That's all.
Great. So at this point, I'm going to be opening the forum out to any of the attendees. If they have any questions, they can raise their hand. If you actually see on the right hand side, there's this option for you to raise your hand, and on doing that, you can actually come on stage and ask a question to one of your any of these speakers. Okay, until that happens, there is one more question. How do we find a fair win-win solution between private equity investor and investee, given that valuations are done and term sheets enter a pre-COVID? Anyone wants to pick it up?
Sure. So, the question is, is there a change? Valuations were done pre-COVID. Yeah, there is going to be some changes in, like we have changed in a couple of things. If the business is going to be drastically affected, then based on new projections, there will be, valuations will be changing, or your projections going forward. You will have to hold on to some of those numbers. It's not a fair year, I agree, to judge the business on the revenues. I think, like I said, we are going to judge on the team's ability to do more than just the revenue, just to hold on, to read the situation, to create new products and business models which will be ready. So, yes, I think we will also internally shift some of the targets to 21, 22 and not judge them so much on 2020.
So we have a question from Vikash Goel. Vikash, I'm going to hand over the mic to you. If you can just allow, yeah, please go ahead with the question.
Hi, can you hear me? Yeah.
Yeah.
So I've already written this in the chat. So this question is primarily to Smriti or Paula. So when we're looking at startup companies which are bootstrapped and not funded, right? How do you manage working capital in these times? So most companies may not be as efficient as Vivek said that they've got 1 year's worth of cash flows. But how do you manage the cash flow during these times when A, the clients are not paying you in time, B, you have lack of business opportunities, C, raising funds is not a great option, and D, equities is not easy to get. So, and even the stimulus that is being planned is mostly in the form of debt funds from the government as well, even if it is cheaper loans. So what would be your suggestions to startups like us who can manage, who are finding it difficult to manage working capital?
No, it is very difficult. You can just. I wish I had solutions because I have 20 companies who need the same. I think I mean, if you have investors, then a lot of us are doing bridge rounds for the companies
Hmm.
on terms which are linking to deliverables in after a year. So
Hmm.
if you have existing investors, that is something to talk about. I mean, other thing is you have to cost cutting is how you conserve the cash.
Hmm.
Come up with some, quick cash. So one of my companies, for example, and I think Manit also mentioned, right? They pivoted to,
Yeah.
selling, which was not in their plan at all. So you have to go outside your business plan, outside your comfort zone,
Yeah.
and just the
Hmm.
way he raised, he got some revenue. So one of our companies also did the same. They completely changed their product portfolio, maybe for a short term because it's not great margins, but it's cash. I think right now we're
Yes.
only looking at cash. It's not sexy. It's not going to be a great story, but it's going to give them cash. It's about survival. You got to just paddle out there, right? You don't need to win any race right now, but you got to
Right.
just keep moving or you'll drown. So you have to just keep your head above water.
Hmm.
And I
Yeah.
can I
Right.
can throw in an example there with one of our companies, Luck to Kids. What they did was they were basically trying to sell an app to preschoolers, but realized that there's cash needed. So now they're doing some remote coaching system development for a couple of schools. So it's not ideal. It's a service business, but at least that's helping them generate some cash to survive over this time.
Right.
Yeah, I think I'll just add there that I think as an entrepreneur, there are two things which are under your control. One is the cost, and one is the core competency of your business. So you need to assess both. What is your core competency? Can you refocus, redirect? That's the first option. Second, costs. What is it that is really important to keep the essence of the business alive, the bone of your business alive, while you can peel off some of the skins that is surrounding it, right? So you need to address these two. And thirdly, if you can collaborate in any way, which with you're taking your core competency and adding it to someone else's and deliver to a situation which we are evolving now, I think that will be great. I mean, like an example of Zomato tying up with Uber at a very large scale, but small things like that will keep coming your way. So you need to really keep an eye out of what collaborations you can have and gather as much cash as you can in the process and just stay afloat.
Right. Okay. Thank you so much. Those are helpful. I mean, we're doing some of these already, but yes, thank you. Thank you very much.
Thank you, Vikash. We're still inviting more questions. In the meanwhile, Archana, I have a question for you from one of the registrants. What is the essence of guaranteed returns on exit for investors? Is it a tenable construct in today's market?
Right. Thanks, Ratish. So, assured rate of return for an investment is a very typical ask from any investor, and it will usually form a place in every shareholder's agreement. But if it is a foreign investor, the same is not legally enforceable, while for a domestic investor, it would work. While there are structures which exist at the end of the day, it is an equity risk that the investor also needs to bear. Otherwise, there would be no key difference between equity and debt.
Great. So I think we are done over here. There are no more people who have any questions. So what I'm going to do is I'm going to kind of end the session right now over here. We still have the opportunity of networking after we have the session. We will probably be meeting you back in the social lounge. Thank you, everyone. Thank you, all the speakers. Thank you for your valuable time. And I believe it was a very good session. Thank you, Archana, for your inputs. Thank you, all the other.
Thank you.
Thank you, Archana.
Thanks a
Thank
lot.
you, Ratish. Thanks, everyone.